Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 29th, 2025, and we're diving into Spotify's Q2 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Spotify's latest earnings report provides a comprehensive look at their performance, and I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Spotify reported a total revenue of €4.1193 billion for Q2 2025, which is a 10% increase year over year. John, can you elaborate on the factors driving this growth?
Absolutely. The revenue growth was primarily driven by a 12% increase in premium revenue, reaching €3.740 billion. This was supported by subscriber gains and RPU increases. Additionally, despite a slight decline in ad-supported revenue, the overall revenue growth was robust, especially when considering the 15% growth on a constant currency basis.
And what about profitability?
Spotify's gross margin finished at 31.5%, in line with guidance, reflecting a 227 basis point expansion year over year. Operating income was €406 million, which was below guidance due to higher social charges and payroll expenses. However, the company achieved a record high free cash flow of €700 million, highlighting strong cash generation capabilities.
User growth and engagement. Spotify's user base continues to expand. They reported 696 million monthly active users, up 11% year over year. How significant is this growth, John?
This growth is quite significant. Spotify added 18 million AUs in Q2, surpassing their guidance of 11 million. Premium subscribers also grew by 12% to 276 million, exceeding expectations by 3 million. This indicates strong user engagement and successful marketing campaigns across various regions.
What regions contributed most to this growth?
The growth was led by Rest of World and Latin America, with Europe and North America also showing strong performance. This broad-based growth across regions underscores Spotify's global appeal and effective market strategies.
Strategic initiatives and product expansion. Spotify has been actively expanding its product offerings. Can you tell us more about their strategic initiatives this quarter?
Spotify has made significant strides in product expansion. They've launched audiobooks in 4 new markets, including Germany and Switzerland, and introduced Audiobooks Plus, a new subscription model. Additionally, the voice-activated DJ feature was launched in over 60 markets, enhancing user interaction through spoken commands.
How about their advertising business?
Spotify expanded its Spotify Ad Exchange partnerships, which now include Magnite, extending biddable inventory access to their DSP partners. This move is expected to bolster their advertising revenue by improving ad targeting and reach.
Financial challenges and market impact. Despite the positive growth, Spotify faced some financial challenges this quarter. Can you elaborate on these?
Yes, Spotify's operating income was below guidance due to $116 million in social charges, which were higher than expected due to share price appreciation. Additionally, currency movements negatively impacted reported revenue by €104 million. These factors contributed to a net loss of €86 million for the quarter.
How has the market reacted to these results?
The market reaction has been mixed. While the strong user growth and product expansion are positive, the financial challenges have raised concerns among investors. However, Spotify's long-term growth prospects remain intact, and their strategic initiatives are expected to drive future profitability.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 2.30 cents for Spotify, but the actual EPS came in at 9.42 cents. What does this mean for the company?
This is a significant miss compared to analyst expectations. The negative EPS was primarily due to the higher operating expenses and social charges. While this is concerning, it's important to note that Spotify's core business remains strong, and the company is investing in long-term growth initiatives.
How are analysts reacting to this miss?
Analysts are adopting a cautious stance. While they acknowledge the company's strategic efforts and user growth, the financial challenges have led to a more conservative outlook. However, many believe that Spotify's investments will pay off in the long run.
Key takeaways. In summary, Spotify's Q2 2025 earnings report highlights strong user growth and strategic product expansions, but also reveals financial challenges that impacted their bottom line. John, any final thoughts on Spotify's investment prospects?
Spotify's long-term growth potential remains promising, driven by their expanding user base and innovative product offerings. However, investors should be mindful of the financial headwinds and monitor how the company addresses these challenges moving forward.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Spotify's performance in the comments below. Until next time.